Are you curious about how to get a lower rate without paying for it? I've got the answer for you next. Hey there, this is Ryan Skaggs and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. We're going to start with the interest rates after an absolute terrible week before where we saw almost a 40-year kind of history-making increase in rates. We've stabilized over the last week. So thank goodness is all I can say on that one. So we definitely have stabilized over the last week. You know, the market was definitely volatile and had a ton of shift to it, but it's slowly starting to kind of steady out, if not maybe slightly get better. So this is getting towards the end of June now, and one of the things that I'm starting to see in the market is, you know, instead of crazy amount of offers on every property, we're starting to maybe see one or two offers. We're starting to see obviously interest rates go up as we've seen over this entire spring, and this kind of perfect storm leads me to the topic today. If you're curious about the average 30-year fix, click the link below. You can go to Freddie Mac. They put out a weekly survey where interest rates are at, and you can go back historical week to week and be able to see that. While you're down there, hit that like button, hit that subscribe. I'm putting out weekly videos on the channel. Click that bell icon to be notified. Again, ton of great content on there. I would appreciate the subscribe. Now let's talk about the topic for today and how to get someone else to give you a lower rate, right? Or without paying for it. So I'm going to put the screenshot up here, and as you can see, 4 different columns. So in the first column, you're going to see a $400,000 purchase price with 5% down payment. I'm using just a general rate of 6%. Again, just for budgeting purpose for this kind of informational video, I'm using it at 6%. So column 2 is, what if you offered $390? What if the seller reduced their price to $390? What if you came in just below and got an accepted offer? What would that payment look like, right? So we can actually page down, and I've got an estimate of principal, interest, taxes, insurance, and mortgage insurance for a total payment down there below. So I'll put a circle around the box, just under $3,100 in that column 2. Now, instead of going in just under a list price, look at that column 3. Now, column 3 is saying instead of a price reduction or offering slightly less, look at a rate reduction. Let the seller, and here's the topic, guys, let the seller pay for a lower rate for you as the buyer. So this is my tip today. I'll take you back onto the screen here. Let's look at column 3. We're showing a purchase price of $400,000. Now, this time, we're going to ask for a $10,000 credit from the seller for the buyer to use as they see fit. And in this case, we are going to use that $10,000 to buy down the interest rate. So instead of a price reduction, we have a rate reduction. So what we are showing here is that from 6%, you can likely get down to 5% using that $10,000 to buy down the interest rate. So from the initial conversation that we had, and that we're looking at how do you get a lower rate without paying for it? Have the seller pay for it in this case. When prices are starting to soften and they're happy to get your offer, that is definitely a viable option. If you're in a market and there's 10 offers on one property, this will not work, right? Is that they're not going to be able to accept this offer because their net would still be $390. Now, going back onto the screen and taking a look, we're going to see that monthly payment is down at $29.15. Way lower than that original of $400, and considerably lower than the what if I paid $390 conversation, where you see that $3,095 payment. So you can see a very big difference between those two. That column 4, and I love this column. What if I had the exact same payment as column 3, that rate reduction? What price point would that equate to in this given market? And that would equate to a $358,000 purchase price with that same 5% down. With today's interest rate, if that would be 6, and again, just using for budgeting purposes, that would give you that same amount. So you're basically increasing your purchasing power by over $40,000 by looking at a scenario like this. Drop me a message, put your comments. Have you ever tried this? If you're a real estate agent, have you done this? Have you had success with it in making an offer? If you've been on the list side, I'd love to hear what you have to say. Put those comments below. But a great strategy. You can't push it too far, but you can definitely look at getting a small to medium-sized credit from the seller. This is Ryan Skaggs, The Mortgage Minute. Thank you so much for tuning in. We'll see each other again very, very soon.